Very good afternoon to all of you as you have tuned into Market Fatafat on ET Now. I'm Shrishti Sharma and with me Cheryl D'Souza, and for the next 30 minutes viewers, we're going to be highlighting all the counters that are buzzing either on the back of the news flow or on the back of the technicals. But before that, let's have a look at what the markets are up to. So Cheryl, there seems to be no stopping for the benchmark indices, 21,200 on Nifty 50.
Absolutely, at the day's highest point is where the benchmark indices are perked at, given the fact that you say thank you to the Federal Reserve, isn't it, Shrishti? Given the fact the positive dovish commentary coming in from the Federal Reserve, the fact that they're expecting 75 basis point worth of rate cuts in the year 2024, that kind of has boosted the sentiment. And not just that, you have a lot of commentary coming now from European markets as well, where they are actually expecting BOE or even the matter of fact ECB to cut rates sharply when it comes to the year 2024. So all of these positive global cues are having a great impact on our Indian markets, and we are at the day's highest point, scaling 21,200 when it comes to the Nifty, while you have Sensex that's trading above the 70,500 mark. But there are a lot of individual stocks that we need to talk about in today's trading session, Shrishti, isn't it?
Well, yes, so let's get started. But before that, let me welcome on board Ashish Kyal on the technical side, who's the founder and CEO at Wave Strategy Advisors, as well as on the research side, Ankita is joining us. Very good afternoon to both of you as well. But let me kickstart with the first stock that we wish to highlight. And the first counter is NBCC. This particular counter is buzzing on the back of a new order win. See, around 3.5% gain is what we are seeing on NBCC. At this bags 1,500 crores worth of order from NCD for infra construction. Definitely a positive news for NBCC, and since the start of the day, the stock has been holding a gains of around 3.5%.
Talking about a stock that is holding on to strong gains, we cannot miss out what's happening with Odisha Minerals or OMDC. That particular counter has seen a sharp up move in today's trading session. It saw an up move as much as 8%. And there you can see it on your screen as well, a sharp spike coming in on that particular counter post of positive news flow. The company has actually got an approval from State Pollution Control Board in Odisha for the iron ore production. And post that, the stock saw an uptick of as much as 11% on an intraday basis, that's the most up move coming in since November 28th, and also taking the stock to its highest level since November 2010. No doubt the stock has given up some of those gains. Also remember that the approval that they've got from the State Pollution Control Board, that is the Odisha State Pollution Control Board, is for the production of 3.6 lakh a ton per year from Bagaiburu mine, and the company, this is what the company said in its exchange filing. So on back of the approval coming in for this iron ore production in the state of Odisha, the stock saw an up move, now trading higher by about 2% as we speak, Shrishti.
Moving on, and let's shift focus to the star sector of the day, and that is the IT space, definitely. And Ashish, coming to you from that, you have picked up Wipro, a bit of an underperformer when it comes to the whole IT space, but seeing a good gains today. So which are the next target that we should be looking out for?
See, I think the entire IT space is possibly starting the upward journey, and this is just the beginning. After a lot of time, we are seeing it formed a good base pattern. Wipro also showed a very strong up move. The overall trend remains bullish. We can expect it to move towards the target of 460 over near term, and on the downside, one can maintain a stop loss for the stock at around 420 level.
All right, so that's the take coming in on Wipro, definitely a sector that is outperforming in today's trading session. But Ankita, let's talk about a railway space and IRTC. Why is this stock in focus today?
That's right, IRCTC is in focus today. In fact, the stock is up almost more than 1.5% in trade, and it is coming on the back of the fact that IRCTC is eyeing a major expansion in non-railway catering business pan-India. Now, IRCTC is on the road to proliferate in the areas of business that is beyond railways. Now, at present, the company is managing catering services for various ministries, government department, autonomous bodies, including judiciaries and universities. But now our IRCTC has already signed MOUs with various government and autonomous bodies. 15 more catering units across the country in the near future is what we are expecting, and it also aims to becoming a premier brand of hospitality and catering services in the country. And on the back of that, IRCTC is buzzing in trade up 1.6%.
Okay, moving on, let's focus to what Vidanta is doing. This particular counter has been in focus. It was showing decent moves on the back of the restructuring exercise because the company has initiated the consent solicitation exercise bonds due in 2024, 25 as well as 2026. Now, what does it mean? That the solicitation is seeking to extend their debt maturity profile, amend the certain covenants as well as amend the terms, because the bond repayments were quite near. So Vidanta was planning to restructure all of that, and the company has been successful doing that. They have initiated that as well. But what was the whole focus area in doing and making this work? It was to improve the credit package of the bonds, to improve the capital structure and overall financial position, and to seek amendments to account for the proposed demergers, what the company has already announced. But for today, there was also a news wherein S&P cuts VRL's ratings to CC from CCC, and the ratings remain on the credit watch with negative implications, where S&P believes that the bid to extend the debt maturities constituted a distressed exchange, and that's why this particular account is in focus. Nevertheless, it's been almost trading flat as of now.
All right, let's move on and let's talk about Info Edge, Ashish. And if you look at this particular counter, spectacular gains coming in today's trading session. But nevertheless, if you see in 1 month, 3 months or 6 months, the stock has tried to actually give some sort of returns to its shareholders. But where do you see this one headed from here on? Do you think the spike that we're seeing today will continue for Info Edge going ahead?
Yes, it looks like. See, if you look at the chart of Info Edge, the previous peak was around 4,984. And we have managed to surpass that substantially. So there is sufficient margin for the stock to continue to go on the upside, and it has formed a rounding bottom kind of a pattern as well. So the overall trend looks to be bullish for Info Edge. We can expect it to reach towards the target of 5750, and on the downside, today's low becomes very, very important support, which is around 4840 level.
All right, let's move on and let's talk about PG Electroplast, and that particular counter is in focus in today's trading session. It saw an up move of as much as about 4.5% or so, taking it that was the biggest intraday jump coming in for PG Electroplast since November 20th. The stock is holding on to good gains, about 4%. Why is this one in focus? It's because Systematics, which is a brokerage house, has come out with a note on this particular counter where they're saying the company's management is confident of achieving about 50% of year-on-year growth in FY24 in the room AC business. This also the comments that have come from Systematics Investor Conference. So that's where the company has actually spoken. They're saying that the total revenue is expected to rise by about 30% year-on-year to touch about 2,800 crore rupees in FY24. They're also saying that while the operating margins across segments have remained stable for this particular counter, a change in the mix could limit overall margin. So this is a statement of caution coming in, but the fact that the company is pretty bullish when it comes to the AC business revenue, or for the matter of fact total revenue for FY24, you can see 4% up move coming in for PG Electroplast.
Okay, that was all about PG Electroplast. But the banking space has been doing pretty well today, and from the back, Ankita, tell us what's happening with SBI.
Well, yes, SBI is seeing an uptick of 7.6% right now, and it is come on the back of a significant move towards sustainable energy. Now, SBI is set to sign a 70 million euro line of credit with the German Development Bank to support solar projects in India. Now, the agreement is scheduled to be inked today at SBI's IFC Gift City branch in Ahmedabad, marking a pivotal step in fostering solar photovoltaics initiatives across the country. And on the back of that, the stock is in focus today.
All right, SBI in focus. Remember, all the banking pack and all the banking stocks will come on the forefront, because a lot of them actually still expect the banks also to actually lead the next leg of rally. And you're seeing spectacular performance coming in from the banking space as a whole. But Ashish, let's talk about the two-wheeler space. Aisha Motors, do you think that this one will be able to actually see a big up move going ahead towards the year end or so, or at least in the near future? Because over the last few months is the only time when we've seen the stock actually perform well.
See, if you look at the auto space is definitely buzzing, and Aisha Motors, after forming a low around the area of 3280, showed a very strong rise towards 4200 and consolidated on the downside, showed some kind of a retracement, and now it is getting ready to again move up towards the level of 4400. So yes, the chart looks bullish. I think Aisha Motors can head towards the level of 4,400, and on the downside, the support for the stock is at 3930 level.
On and let's, amidst the strong market, let's shift focus to some of the counters that are seen to be in the red today. They are drifting lower on the back of the news flow. And I'm focusing on the life insurance companies from the likes of HDFC Life, SBI Life, ICICI Pru, as well as Max Financials. All these counters are trading in red on the back of news wherein insurance regulator IRDAI proposed higher surrender value for insurance product on the non-par insurance product. Now, what does it mean? That this could have a negative implication on the VNB margins for all the insurers, assuming that they do not change their payout to the distributors and IRRs. Now, insurance will relatively lower their exposure in the non-ULIP business. That's expected to have a lower impact. Now, let's find out that who all have a low exposure to the non-ULIP side of the business. Then names arises SBI Life as well as ICICI Pru. So these two are relatively better placed in comparison to HDFC Life as well as Max Life, which have a higher exposure to the non-ULIP business. However, the persistency ratio for all these companies have been improving, but the contribution of the surrender profits to the product VNB has reduced over the period. Now, if insurance try to protect their margins, then they need to reduce the payout to the distributors and RRRs for the product, and this could impact their growth as well. And on the back of this particular news flow, all these insurance companies are seen to be under pressure.
All right, so keep an eye out on the life insurance companies. But on that note, we slip into a break on this edition of Market Fatafat. More on the other side. Don't go anywhere. Welcome back. You're watching Market Fatafat on ET now, and let's continue taking through stocks that are buzzing. And Phoenix Mills, that particular counter, is in focus in today's trading session. Yes, if the shopping fever is on, there's one company that will also definitely benefit from that, and that is Phoenix Mills. And that is what JM Financial has actually written in its note. They've said that the company is likely to deliver higher earnings growth versus the discretionary consumer companies. They say the company's earnings growth as well as margin profile outshines its peers. They've also said that the company is well placed to benefit from growth in retail industry, portfolio of brands, the best proxy to play across discretionary spends of an average Indian consumer. Therefore, JM Financial has maintained its buy stance. They've raised the target price for Phoenix Mills to now 2,520 rupees per share from 2,270 rupees per share, which is substantially higher from where the stock is currently perched at. And if you look at the stock price, it's up for a fourth consecutive session. So yes, JM Financial giving a thumb up to Phoenix Mills, also raising a target price, is adding to that fervor in the stock.
Okay, moving on then, and the financials have been doing pretty well today. And from the pack, Ashish, you have picked up Bajaj Finance, holding up a gains of 3%. Tell us which are the next targets we should be looking out for.
See, Bajaj Finance is formed a flag kind of a pattern and showed a very strong breakout in today's session. I think the stock is going to be headed towards the level of 7,800. Also, if you check, the stock has formed a double bottom near the level of 7,000. So the overall structure looks positive. I think financial stocks are anyways outperforming, and Bajaj Finance will try to catch up. So 7,800 is the target, and on the downside, one can maintain a stop loss of 7,200 level.
All right, moving on then, let's shift focus to Uno Minda, then Ankita. Why is this counter in focus?
Yes, Uno Minda is in focus because the company has commissioned its new automotive seating system plant under subsidiary Uno Minda Taji Seating Private Limited, or UMTS, in Ahmedabad, Gujarat. Now, the plant will manufacture mechanical parts for automotive seats for passenger cars, and UTMS has already received orders from OEM and is expected to start the supplies by Q4 or FY24. And the back of that, Uno Minda is in focus today, currently trading towards the day's lowest point though.
Okay, moving on then, let's shift focus to what Power Grid is doing in a strong market. This counter too is in red, and that's down about 2% after UP has come out with its note where they have initiated a rating on this particular counter with a sell rating, and the target price is lower than what the current market price is at 205 rupees. What UBS is saying is that unlike generation, the transmission capex progressing at a slower pace, wherein private sector participation in the transmission is relatively higher, adding to the competitions. Now, the company's work in hand is stagnant at rupees 50,000 crores since FY22. I beg your pardon, since FY20, and there has been no substantial jump over there. And at this point in time, valuations look quite expensive to them. It's trading at a valuation of 2.3 times FY25 1 year forward price to book value, and they are finding it expensive as of now, and that's why they have initiated a sell with a target price of 205 and hence the cut of 2% in Power Grid.
All right, that's Power Grid sulking in trade on back of that UBS note. But IRFC, Ashish, looks like there's no stopping for these railway counters after a phase of consolidation. They've picked up steam and how? Look at them, 184% in the last 6 months only for IRFC. Do you think that now they'll take a pause and run up to the budget and elections?
See, if you look at IRFC, it has it is breaking out towards the lifetime high levels, and we can see it is going in a very strong stellar fashion. I would not come in the way of this trend. Rather, I would use any kind of a dip if I get anything around 89.90 levels as a buying opportunity, aiming for around 107 levels on the upside and maintaining a stop loss today's low, which is around 85 levels.
All right, so that is the take coming in on IRFC, but let's shift focus on one but two counters, that is SBI as well as Paytm. Both of them are in focus on back of a note that's coming out from Jefferies, where Jefferies is believing that opening up of the UPI to credit cards and digitization of existing cards to RuPay can be a large opportunity, as it can actually add about 2 to 3 crore acceptance points. In fact, what they're saying that payment platform companies like Paytm should benefit the most with the better monetization of UPI, whereas issuers like SBI cards can capture the share of UPI spends. What they're saying over the next 12 to 18 months, about 35 million credit cards may move to UPI with about $60 billion of payment volumes. Therefore, they're pretty gung-ho on both Paytm as well as SBI card based on this particular development. And you can see the stock price on your screen, both of them trading in the positive territory on back of Jefferies' note.
Okay, but let's shift focus to what's happening with Lodha, that is Macrotech Developers. And Ashish, this is the counter on your radar, and the realty space all in all is doing pretty well today. But how is the chart looking like for this one to you?
If you look at chart of Lodha, we can clearly see there is a good reversal pattern on the upside, and we can see from 880 levels it managed to bounce back multiple times. This time as well it bounced back from the 880 levels, and on the upside I think the stock can be headed towards the level of 1040, and the overall trend remains bullish. One can maintain a stop loss of 880 on the downside for 1040 as the target.
All right, so that's the take coming in on Macrotech Developers. With that, we come to the end of this edition of Market Fatafat. It's a goodbye from Srishti, myself, and the team that put the show together. But stay tuned. Tracking Trends with Nikunj Dalmia is coming up next.